Hey there, welcome back to your South Florida Mortgage Report with Billy May, your hat dude wearing, cigar smoking mortgage guy. I'm flying solo this week. My colleague Craig is actually taking much needed vacation for spring break with his family. Hats off to you, Craig. I hope you have a great vacation. Don't think about work. Enjoy your vacation. Let's talk about a few things. We're going to talk about mortgage rates like we normally do. We're going to talk about some economic indicators, what's going on with the economy, which always affects mortgage rates. We're going to talk about the state of Florida, the Florida Congress, supposed to be passing some meaningful legislation to really property taxes. The state Congress, the Florida legislature, they met this week. They finished off their session, and we're going to give you an update on that. We're also going to talk about if you're a realtor and a buyer, how can you make your offer a little more enticing to get that deal signed? Lastly, we're going to finish up with something called a subject called trigger leads, how this affects you as a consumer. And if you're a realtor working with buyers, how can it affect that as well? So let's just jump right in. So what's going on with mortgage rates and markets? Well, markets spent the week kind of navigating this volatile mix of geopolitics, energy shocks, and some shifting monetary policy expectations, all with the escalating conflict going on in Iran, the Middle East, and the Strait of Hormuz. Now, the Strait of Hormuz is in the Persian Gulf. That's where a good portion of the world's oil flows out of. So, there's a lot of insecurity right now. There's a lot of tensions going on because this military action could be lasting a little longer than they initially anticipated. So, if that happens, it raises the risk of disruption of global oil flows, basically. So, this all kind of came to a head, so to speak, in this week with crude oil hitting over $100 a barrel. Now, what it does, obviously, it affects gas prices. You've seen gas prices go up. It affects all kinds of consumer goods, has a negative drag on the economies. And also this past week, we had some reports come out in regards to GDP and consumer pricing and spending and so forth. So it's really having a drain on the economy. And really, this week was kind of interesting because the stock market is down. Now, normally, when the stock market goes down, investors take their money out of stocks, they put it in the bonds because the bonds are thought of as being safer for investors. Well, the yield on the 10-year bond is about up. It's almost up to about 4.3 this week, and that's not good for mortgage rates. So we're kind of in this interesting scenario right now where bonds usually, in this normal scenario, when stocks are going down, bonds are safer. It's better for mortgage rates, but that's not the case. As usual, we talked about the Freddie Mac survey. Well, the Freddie Mac survey came out on Thursday. And according to Freddie Mac survey, the average rate kind of climbed up to 6.11%. Now, as we've said here on the podcast before, that survey from Freddie Mac comes out on Thursday evening, Friday morning. That data that they collect, it's about 4 or 5 days old because Freddie Mac surveys all these lenders from across the country to get an idea where rates are. By the time they gather the data, come out the report on Thursday, it's about 4 or 5 days old. On Thursday, it said average rate, 6.11%. Realistically speaking, though, in the past 3 or 4 or 5 days, this past week, rates went up to about 6.4%. So about 3/8 in rate in a matter of just a few days. It's been a challenge for us as loan officers to try to manage our pipeline and manage the expectations with the consumers and so forth about what's going on with rates. And we're going to talk about that a little bit later when we talk about triggers. What's going to go on this week? The markets right now, they're focusing pretty much squarely next week's meeting of the Federal Reserve. There's a lot of challenges that's going to be going on because they're really trying to balance what's going on with inflation, stagflation, the employment data. And it's looking like the Fed Chairman Jerome Powell, they are not going to cut rates again, which is pretty much expected. And that's what's going to happen when they meet this coming up weeks. Let's see what goes on there. So let's talk about next thing. If you're a realtor, if you're a buyer, you're putting an offer on a house, what's some of the things you could do on an offer to get your offer accepted? I'll give you an example. I have a realtor call me this past week, put on an offer, and on the offer, they put in 30-day loan approval, 10-day inspection, etc. Listing agent gets the offer, gives me a call right away. Hey, Bill, how you doing? I got this offer. Can you tell me a little bit about the buyer? Are they good? They're putting good money down. It's conventional loan, putting, 30% down, et cetera, et cetera. But one of the things they said is, hey, can you deliver a loan approval and appraisal within 15 days? So, of course, so we could do that. We have our local panel of appraisers. Appraisers, they pick up these orders rather quickly. They get out there within a couple of days. We usually have the report back quickly. I've already pre-approved this buyer and gone through all their income and credit and assets and so forth. They look good. So I said, sure, yeah, we can do that. I did confirm with the realtor who confirmed with the buyers we're willing to do this. The listing agent asked for the DU, desktop underwriter, we had to get that authorization. Boom, we sent it over within a couple of hours. The realtor referred it, the listing agent reviewed it, and they said, okay, yeah, we're good to go. So hats off to my buyers and hats off to my referral partner, my realtor. So it looks like we're going to get this deal done. We've already got the contract as of last night. Good to go. But just as a realtor now, if you're putting 30-day loan approval, just be careful. So, and it does make a difference on which lender you work with. We're going to talk about that too soon again when we talk about trigger leads. We're going to discuss that. But first, let's talk about the Florida delegation, Florida House and the Senate. They met, they finished up their session this past week, just yesterday on Friday the 13th, and they've closed out their session without addressing affordability on a number of items, but they have not come to a conclusion on the Florida property tax reform that they're trying to get through. Remember a few months ago on our podcast, we had State House Representative Chip LaMarca, local representative, went through everything with us. And at that time, they were looking at 8 different proposals. They've narrowed it down to 1 or 2 now, but they just can't get everybody on board. The state house has got one passed. The state Senate hasn't passed it yet. They finished up their session yesterday and they said, listen, we're going to be coming back next month in April. We'll address these things then along with some other items they got to take care of. So hopefully next month, the property tax reform we're talking about, that will get passed. Hopefully it will get on the ballot, and hopefully Florida home buyers have the opportunity next November to vote on Florida property tax relief for primary homesteaded property. So good stuff. More news to come next month. Now let's talk about trigger leads. What is a trigger lead? And why are we talking about? What's in the news about it? Well, last September, the president signed a new bill. It's called the Home Buyer Privacy Act. And what is a trigger lead? A trigger lead is basically when a buyer applies to the lender, us, we pull their triple merged credit report. Up until now, that the 3 credit reporting agencies, Equifax, TransUnion, Experian, were able to sell the fact that the buyer had their credit pulled. They could sell that to different lenders. And so whenever we pull a credit report, boom, right away, they're getting phone calls. My buyers are getting phone calls from all these lenders, usually online lenders, different parts of the country. They're getting phone call, text messages, email. Hey, Mr. Coomer, Mrs. Coomer, we've seen you have a credit pull. You shopping for a mortgage. Let me provide for you a quote. Now, the pros, and there's different pros and cons in it. The argument for this is that lenders say, listen, it gives the buyers an opportunity to shop around interest rate. But really, the con of that is that it really, this is where it makes a big difference, is that us as Capital Partners Mortgage, and what we do is we pull a triple merged credit report. All 3 credit reports, it's a hard pull. We know exactly everything that's on that credit report. Now, the thing is, once we pull that report, the report is good for 120 days on most loans. We pull that credit report, the score is used. As long as you close a home within 120 days, we can use that same report. Now, it doesn't mean you can go out and buy a Ferrari next week or something, but because we're going to monitor the credit. But that's the report. That's the score that we use. So these other lenders, what they'll do is what's called a soft pull. They'll pull one of the bureau score, and then they'll tell a buyer, hey, yeah, you're pre-approved. We pulled your credit. Well, they did a soft pull. They only pulled one of the reports. Now, the challenge is that not all creditors report to all 3 credit bureaus. So a lot of times what's happened in the past is these lenders, they'll do a soft pull. They'll get one score. They'll tell the buyer, yes, you're pre-approved, good to go. Here's your pre-approval letter. They go out, they put her offer on a house. They get a contract in the house. Then that lender did the soft pull, only got one score, pulls the other 2 reports. There's something that could pop up on the other repositories. Could be a collection, could be a late payment. The scores could be drastically different. I've pulled triple merged credit reports where there could be a score of 720, 715, and 640 because there was a collection or something on another report. When we pull a triple merged credit report here at Capital Partners Mortgage, buyers know right up front because we review the credit report with them. We go through all the liabilities. We also look at the inquiries and say, hey, wait a minute, you had an inquiry 3 months ago. Is this a new debt that you incurred? It's not a credit report. These are the things working with us. So we're going to do a very, very thorough job to ensure we've got everything cleared up because we don't want any swing or any kind of funny business going on throughout the mortgage process. That's another reason why that they passed and they signed this law into effect and protect consumers. So good stuff. Policy. It's called the Home Buyer Privacy Act, went into effect on March 5th, just a little over a week ago. So good stuff. So let's get back to the state of Florida. Okay. What else is going on in the state of Florida? Hometown Heroes. There's still $4.8 million available for the Hometown Heroes down payment assistance. It's a great product. And what happens is that this is designed for first-time home buyers. If you've not owned a primary home the past 3 years and you work in a certain profession, usually it's first responder, education, medical, healthcare, et cetera, you can get access to this down payment assistance program. The state set aside $50 million last August. There's still nearly $5 billion left. I like two this week, two buyers this week, still taking advantage of that. So if you're a home buyer out there and you'd like to get some down payment assistance, you can apply for this, providing you qualify. If that product's not available for you, Capital Partners Mortgage, we have other products that can help for down payment assistance. Good stuff, great stuff. Make sure you're aware of that if you're a buyer and if you are a realtor. So, yeah. In closing, if you're a buyer looking to get pre-approved, call me direct, 954-536-7587. Email address is bmei@cp-mtg.com. If you're an agent, let's say you have a listing, get some offers, you want someone to review those for you, to review the pre-approval letter, maybe review the DU, make sure that buyer is good to go. Reach out to me as well. I'd love to help you close more deals. So have a great week. If you have any questions, give me a holler and we'll see you at the closing table.